Welcome to Java. Thank you kindly for joining me from the road. It is June 10th, 2025. It is also Tuesday. My apologies for missing a video yesterday. There was just not any feasible way that I could get it going. But as it's going, let's get into what's going on with the markets this morning. Now, we've got fear grade meters come up a bit. A lot of retailers jumped in yesterday, even though it was kind of a neutral day. Not much to really talk about other than the drivers behind it. So not a lot of news, still a very headline-driven market, meaning it can be very volatile very rapidly. Now, watching the 10-year yield, it has risen slightly. It's at 4.455 right now. So again, nothing massively moving at the moment, but it appears as if it's dropping a bit. It hit a resistance level and pulling back. That means there is a bit of purchasing going on in that debt market. Now, we've got the relative strength of the dollar has risen only slightly. Again, nothing major. The big story here between things is really into cryptocurrencies. Bitcoin back above 109,000, and it's taking most of them with. Now, XRP lately had gone up more, so it's not traveling in with that boat, but all of the others are getting some nice gains out of this. The next resistance level for Bitcoin is hitting about that 110,000, and we'll be watching what it does from there. I kind of expect it to pull back a little bit, but we'll have to wait and see what it does, because Bitcoin is Bitcoin, and there's also quite a few more companies looking to buy into it now as a reserve, as opposed to just holding fiat currency. So prior to the opening, we've got kind of it's a flat market for the most part, with volatility rising. So this is the only notable thing on the chart really of these. So bit of weakness and continuance, still a risk on environment with more greed than fear, definitely among the retailers. And futures are also showing quite flat. So gold and silver are a bit of the flat ones yesterday. Silver having a decent run, so I don't think that one is quite done yet. And in the longer term, very bullish silver. I think commodities are beginning to show. Palladium also was a good mover if you happen to watch that. Now we've got crude oil moving. That is mostly going to be affected by the talks. So let's talk a little bit more about what's going on behind what is moving these. So the daily driver, as I said, is risk on. It is possible we could hit all-time highs again, either today or tomorrow, and we'll talk about what I look forward to. Now, the main stories really going on today are the trade talks with China and the United States going on in London right now. The main courses that they're talking about are the chips from artificial intelligence, namely the H20 chips from NVIDIA, and the rare earth minerals from China. So they're still trying to hammer out some of these talks. The reason this could be the top one is because if they come out and announce that they've got a deal that they've made, that could very rapidly bring these markets back to all-time highs in very immediate fashion. If, however, the opposite happens and they come out and say no deal is happening, that could have the opposite effect and in short, crush them. So what else is going on in the background of all of these currency trades and trying to balance out this trade war is really all of these disruptions that have gone on for some time in the imbalances. So Bank of Japan saying their inflation is still below their target. So they're trying to increase it to kind of level out their economy. So they're weakening their yen to try to help this out. That's a different way to say they're quantitative easing through a different method. So printing has many forms, I suppose, would be a good way to say that. We've got the European Central Bank also cutting their rates, also easing, and saying they can still move quickly in order to adjust rates. Now, the ECB is a little different. They've got Germany as the main driver behind them. So we are watching really for global economy, Germany, who backs the ECB, and the Bank of Japan, and then in a lower sense, the UK. The UK is ahead in kind of this deflationary move. Now, moving on, we've got the other driver going on, the protests in Los Angeles. Now, these are driving a lot of attention more than anything. And what this is doing is this is causing major distraction so that other regulations, if you will, restrictions, and the likes can be written in. So this bolsters the need for digital IDs and other things. But the protests are really what they're putting in the front of everybody at the moment to look at and not pay attention to other things going on in the background. So let's take a look at some of those. For the calendar, not too much Monday, not too much today. What is happening? We're getting core inflation for Wednesday. Now, the market's going to look at those to look forward to Fed cuts in the rates. Again, easy money and more printing. That would make the market go up. So watching core inflation to see what the Fed will do. Thursday, getting more jobless claims and the core PPI. Now, the real thing that the market is looking to is actually next week. And this is the Federal Open Market Committee's rate decision and then Fed Chair Powell speaking. This is next Wednesday. So starting to gear towards that aside from these trade talks going on. Now, some things that could hit like particular sectors of the market. Chips, again, Nokia is teaming up with AMD in order to power what they're saying now, next generation 5G networks. These are also, by the way, now artificial intelligence powered. So AI plus 5G. There's a bit more to that in the background, but not going to go into that here. We've also got Ericsson over in Europe partnering with Supermicro to bring 5G powered AI to factories, retail, and hospitals. So very much a growing sector to pair 5G with artificial intelligence, but these companies within this sector are on the rise because of this. Now we've got a sector that is taking a major hit this morning, and that is the big pharma. In short, RFK Jr. has fired the entire CDC vaccine panel. He says it's to restore the public trust, and a lot of these larger corporations are taking a hit this morning, and I expect that to continue for a while. So along with this, we've got the bipartisan House approval proposal. They are looking to speed up defense acquisition. What is that exactly? That is speeding up and increasing the budget for weaponry production, as well as the research and development for these weapons. So a lot more money pouring into these weaponry. So what does that mean? Defense contractors, they've been doing very well. I've spoken of this, I'm not in them myself, but the likes of Raytheon, Lockheed Martin, and the rest of the defense sector will be increased through these government budgets. Couple of other things. Something very interesting. IBM is looking to build a practical quantum computer by 2029. So exactly what they mean by practical, because there's major issues with them, it is interesting and very borderline. However, the note of interest is that it's International Business Machines, who many of you, if you've been around for a while, know they were pretty much one of the first ones to start. So if they come back into the forefront, that would be very, very interesting indeed. Now, we've got this coming out again. We've been warning about how they can literally change history in the books by now editing online books, publications, and such. So mass data deletion is a call to digital preservation action. So we're already seeing this. Amazon now, if you're not aware, if you've got Kindle Reader books or anything ebooks, those now are very quietly in the background being edited. So unless you have a paper hard copy or an offline, we could be losing, and this could cross over to history books or the likes. These will also continue to be trained by artificial intelligence, who then in full circle will be rewriting some of these in the very near future and actually some of that is already occurring. So just to make you aware, if you appreciate something, download it, take it offline. If you must, keep it digital. The last thing I wanted to bring forward was Tether's plan to counter a bank stablecoin. So another word for CBDC. No one likes to say CBDC anyway. It has become a moniker of something very negative in the banking industry. Now, I want to bring something else up with this because there are a few stable coins that are vying for this top position to be the main stable coin, tethered coin, or CBDC. They are all the same thing, and that could be housing. Now, two factors in this. First off, the housing market is rapidly shifting, and there are mortgage-backed securities, which are already looking at being traded on the blockchain. Secondly, with all of this and the digitizing and the market dropping as it is in most areas, they're going to use this as an excuse as well as affordability issue in order, I believe, to swap this over with the lending. They could easily put in mortgage lending with a particular stable coin in order to streamline, in air quotes, streamline to those lenders and buyers that it would be a major advantage for them. And that way, this major backing through housing and the housing loans, along with the new regulation coming out, could shift that in as well. So I just want to bring that out, looking more into this and keeping an eye on it. So with this, I'm going to leave you with this. I may not be able to get out a video tomorrow as well. The timing doesn't look very favorable, but I'll do my best. Until then, my friends, resist.